Thing number four, down goes the yen, exclamation mark. I got to add that in there.
Yeah.
Down goes the yen. Another exclamation point for emphasis, Gary. Thing number four.
Yeah. So for our older sports fans, that is a reference to Howard Cosell's epic call when Muhammad Ali knocked down George Frazier. Um, and as he was yelling, "Down goes Frazier." I don't want to imitate Cosell. You can't do that, but that's what he was yelling. It's a very famous um, sports call. Anyway, we've talked about the Bank of Japan before. The issue that they have is because Japan has an insanely high debt to GDP ratio of over 260%, they have to keep their interest rate incredibly low. Their reference rate, their version of the Fed funds rate is just barely above zero. It's basically 0.05%, less than what you were getting in your checking account 15 minutes ago. And they had a negative, again, their version of the Fed funds rate for 9 years. And so what's happened is, here in the US, you can make more than 4% in the 10-year. The Japanese 10-year, has been trading under 1% for years. And so people were putting on the carry trade. And what that means is they were selling yen, and that costs you, less than 1%. And they were buying US treasuries and making 4% and capturing the spread. And as long as the relationship between the yen and the dollar doesn't move too much, it's a risk-free trade, except that relationship can move. Now, what the Bank of Japan has done, they've made a mistake. They keep trying to intervene in the currency markets. And, great chart here by Andrew, showing that in 2021, the Bank of Japan intervened with with $62 billion. That basically what they did was they sold foreign exchange reserves like treasuries and use that to buy the yen. And so, supply and demand, right? Sell the thing that's expensive, buy the thing that's cheap, the yen. And that should work, right? And then they did the same thing again earlier this year, another $62 billion of currency intervention. The problem is it doesn't address the underlying factor here, which is the massive spread in interest rates. And so they've done this twice, and in each time they got an effect that lasted for somewhere between 1 and 2 days. And the yen immediately, once the Bank of Japan got out of the market, stopped manipulating the market, the yen immediately started to slide. And we hit I believe it's a 38-year low earlier today. So just to give you guys a sense, the yen was at either 102, 103 to the dollar in 2021. Today, it was 161.5. That is a loss of almost 60% in a few years. Typically in the foreign currency market, a move of 2 or 3% in a year is considered a big move. This is enormous. The Bank of Japan is trapped, and the policy prescriptions that they're following is not working. And, just a couple of months ago, they hit 150, and people thought the Bank of Japan would defend 150. They tried, they were unable to do so. We're now on the wrong side of 160 for Japan. It is a huge problem for them.
Yeah, definitely seems like they are stuck, Gary, in between a rock and a hard place. You call out modern monetary theory, MMT. I have a good friend that I'll be sending this clip to, but I'm curious, what warning do you have for those readers or individuals that might support MMT?
Yeah, Rob, that's the right question, because people could legitimately say, "Hey, what are you doing picking on Japan? You guys in the US have your own problems." And you know what? That is 100% true. And one of the things I always make a point of doing when we talk about this is saying, "I'm not picking on Japan. They're the warning. We have the same problems here in the US." And so what they did in Japan was they kept interest rates phenomenally low for far too long, and they spent and spent and spent. And when your interest rates are negative or zero, your cost of borrowing is negative or zero. And it allowed them to spend on things that they couldn't afford. And so MMT, modern monetary theory, is basically this idea that the government can print and spend unlimited amounts of money, and debt doesn't matter and deficits don't matter, because you can just print more currency, more fiat, more dollars or more yen to pay the bills. So what's the big deal? Well, watch Japan, because this is the big deal. Right now, their currency is sliding. And, remember, Japan has to import energy. and energy is typically priced in dollars. So I want everybody to imagine, if you think this isn't a problem, right? Imagine going to go fill up your car and the price is 60% higher, right? Imagine $5 gas going to $8 and how crazy people would be. Or better yet, heating your home, right? Look at your heating bill from last winter and now imagine that's 60% higher. This is the problem that Japan is going through. And it was created largely by them following the kinds of MMT, modern monetary theory policies that are creating the exact same problems here in the US. And so my warning, which nobody in Washington is going to pay attention to, is that the people in Washington need to understand that they do not have, they have access to a printing press, but they don't have access to creating unlimited value. And if you keep printing without producing, all you do is debase your currency, right? And so the answer is, if Washington doesn't figure this out, and they're not going to, the answer is going to be more inflation. Now, I don't like it. I'm not cheering for it. It's horrible. It's wrong. It's going to make life difficult for a lot of people. If you're listening to this, there are things that you can do to protect yourself, right? Stock up on things like food now before prices go up even more. If you have the resources, right? Things like gold, maybe a little bit of silver, Bitcoin, energy stocks, uranium. There are lots of things that you can buy or invest in, assuming you have the liquid funds, but you can switch out of debasing fiat, the dollar, and buy things that will have, that are harder to reproduce, that will have more value in the future. So I don't like these government policies. It's not my job to be happy or unhappy. It's my job to help people make money in good and bad environments. So if you know this is coming and you know more inflation is coming, there are things that you can do to prepare. If you want more help on this, Deep Knowledge Investing does that, right? We help people prepare for this, and we've guided people very successfully through the last few difficult years with a lot of inflation. That's what we're here for. But what's happening with Japan and the yen at 161.5 today, that is a warning that no one in Washington is going to take seriously. But that doesn't mean that we, as investors and citizens and human beings, shouldn't take it seriously and act ourselves.
Thank you for taking my promo opportunity there, Gary.
I'm on it.
What I was going to say is exactly what Gary just said. We've been talking about a lot with inflation, how to position that portfolio, whether good market, bad market, good news, indifferent, whatever it may be. DKI is positioned to help you navigate as these decisions are made, as these situations arise. Be sure to check out plenty of content material on inflation on the blog. And then as well, if you're a premium subscriber, looking at how those current recommendations are positioned for exactly what Gary just mentioned.